Despite economical data from the US coming in bullishly, the crypto market is showing more sideways, a little bit to the downside action. And actually, there are a couple of worrying signs in the charts that I want to discuss with you and also shed a little bit of light on what's going on at the moment. So hey everyone, it's the Patient Hodler coming at you with another crypto market update. And if you enjoyed those updates, then please smash up the like button. Let me know through the likes that you want more of these updates, and these updates are helpful for you to understand what is going on. But now let's jump right in and see what's actually happening and what I mean by worrying signs in the basically indicators here for Bitcoin. So what we see here is the monthly chart of Bitcoin with a lot of lines. You can ignore them, but the green lines are the halving, and we have our RSI here as well as our stochastic RSI. And if you remember from the live streams, from the Crypto Morning Coffee streams that we had in the couple of weeks before today, we were actually saying that if we are entering here with a stochastic RSI, with the slow line, with the orange line into that blue zone, then our momentum is on severe correction to the downside. And so far, this correction has more or less gone on for 30 something percent. And it's not the first time that this happens in a bull market, but it shows that we might not be done with the downside here. And actually, these 33%, they are very normal corrections for the bull market, but it can develop into a more severe crash because if you direct your eye on the stochastic RSI here and you look whenever this orange line headed significantly back into the blue zone, then usually momentum came so far down and we had experienced significantly crashes. So for example, here when this happened back in 2017, we actually experienced a 84% drawdown. So if that would repeat again, obviously, first of all, we would be back in a bear market. And secondly, we would still have another 50% to go. But it also happened here. So if you look at this drawdown, we can see that was a 71% from the highest wick to the lowest wick here. And that was the C crisis crash. And that was a crash that actually happened in a bull market. And actually also, this was a crash that had a small recession with it, which is something that people are speculating is going to happen here as well, before the recession got printed away and we entered this massive parabolic rise here. Coincidentally, after the halving. Also, right after the halving, somewhere here was the election, the last year's election. So we also pumped significantly after that, where some people are speculating that the pump has more to do with the election than actually with the halving in itself. Now, let's look at what happened here. So this is the only time that this orange line, the stochastic RSI, entered the blue zone and did not go fully to the ground, because that would be bear market, right? So here you have bear market, here you have bear market, and here you have a bear market. But there was this one time where this didn't really lead to a bear market, and that is exactly this situation here where we have the 70% drawdown. Now, it would be a complete outlier if we were to just turn around here with the momentum without seeing more downside. And with that, we should carefully assess where we are in terms of macroeconomics right now with Bitcoin. So if we're taking a good look at what is happening in economic data, we had the CPI reading and the PPI reading in the past 2 days. And they both came in, so to say, better from the perspective of giving the Fed actual reasons to lower rates. And I would say that the Fed is already behind. They should have already lowered the rates by 25 basis points or 50 basis points. But now we see that actually the economic data is still strong for example, retail sales. They came in way better than expected, as well as core retail sales, initial job claims, continuing jobless claims, and the NY Fed Factory Index. So all of them beat expectations, which means that the economy is still stronger. And usually that is an argument where Fed Chair Powell could say, hey, we are not going to cut the rates by an extreme measure, right? So what we see is that the retail sales rose 1% on the month, better than the expectations, which was only 0.4%. So these sales numbers, they are actually meaning that people are still spending. That doesn't mean that the economy is in general in a good shape, because we have also seen in the past streams that US citizens are piling up credit card debt and consumer loans. So this could be sales increase on credit card. So that doesn't mean that there is that there is no debt against it, and that just everyone made more money and started to be more productive, and thereby these sales rose. But it could be on credit, as people refuse to cut back their spending at the moment, right? So but at some point, something in the credit card bubble world will break, and that could lead to massive crash. So if many people have credit card defaults, for example, or delinquencies at the same time, then this can lead to economic meltdown in some parts of the economy, right? So what we see is that if we look at US inflation and unemployment, actually these numbers are pretty good. In terms of that, the US inflation fell to 2.9% and beating the expectations. So this is an argument for finally starting to cut. And if we're looking at the Fed policy rate here, right? So we see interest rates rose, and now it's flatlining since I don't know, since the beginning of the year, since end of last year, basically. And everything else, like the CPI headline, the PCE, the PC core, the core CPI, everything came down already and is on a downwards trajectory, right? And here's the 2% target. So we are not too far away from the 2% target. And by the way, here is your like quantitative easing tightening. Here's your recession, right? Here's the recession from the previous cycle. So this could appear here as well. And you see, recession hit and boom, they are printing money like hell, right? So this could happen here as well, but it can lead to a flash crash in the market. So where I'm getting at is, before the massive rise comes, there could be a flash crash, meaning we should have dry powder in place. So there is another 34 days until the next FOMC meeting. And this implies a couple of things. First of all, no one is calculating with rates being stable. This is 72% of a 25 basis point rate cut. And even almost 30% of people believe that actually it will lower by 50 basis points, which would be insane. But it could happen. It could happen. I personally believe we go with a 25% cut. Now, 34 days is plenty of time for something in the economy breaking, right? It's plenty of time. I don't say it has to happen, but some indicators point in the direction that it could happen. And then, believe me, if it happens, if we see another massive drawdown in the next couple of weeks, there will be, every bear will come out again with their 12K Bitcoin price prediction, with their I told you so, with the Bitcoin bull run is over narrative. And then the money printer hits, right? And there will be victims left in the streets that will panic sell their stuff because they believe that in this flash crash, they believe that it's all over and that crypto is going to zero. And that is exactly the time when we will be ready with our dry powder. And I'm not saying that it has to happen, but I will be ready to ape once more into Bitcoin, especially Bitcoin, but also bigger cryptos, to take advantage of such a development. Now, here's our daily dose of FUD to the indicators as well. There are some rumors claiming that the US government sold 10,000 Bitcoin to Coinbase. It's actually written like this, sells to Coinbase. We have seen here on stream before that the US government has closed a deal with Coinbase as custodian. So they moved 10,000 Bitcoin to Coinbase. This doesn't mean that they sold it. It could be that it's only a custodian, right? So, but here it leads to FUD, and FUD leads to people selling off in the market, especially retail investors. Now, let's look at the good side as well. This is actually a very big development because it's integration of TradFi with crypto. So MetaMask is launching a crypto card in partnership with Mastercard. So this is developed by Consensus, introducing a new crypto card in collaboration with Mastercard and BANX Group, enabling users to make everyday purchases directly from their crypto wallet. So let's say you have whatever, like you have a MetaMask wallet, you can integrate with this card and you can make everyday life purchases with that, meaning it somehow connects TradFi with DeFi in that sense, right? So it's basically, it's also good for Mastercard because they basically have their footing now in this new decentralized world, right? So yeah, it will be launched in the EU and also in UK, and then probably at some point the US will have to find a way, so that's also possible to be adopted in the US. But this could be the first step in this direction where TradFi adopts crypto in this sense. And I think this will be also for all these projects like, what was the name? These projects that have their own wallets. Like, for example, VeChain has a wallet. Obviously, MetaMask wallet is there, but Phantom wallet is a very big one. They might all close partnerships like this to bring out their own cards that the wallet is somehow used so that you can purchase directly from your decentralized wallet. Also, and this refers back to global liquidity, what we see is the M2 money supply is already going up. We see it here above. And Bitcoin usually follows. So you see here, right? The M2 money supply goes up. Bitcoin has a small peak, sideways move. M2 money supply does another big move, and then Bitcoin goes completely nuts. And we have this right now here, this first initial peak when M2 money supply went a little bit sideways, like here and here. And now Bitcoin is under the M2 money supply, so indicating that at some point it wants to follow. And we saw it already with the gold price. Also there we had Bitcoin a little bit decoupling at the moment, gold already on tear. Again, there could be more downside in the immediate short term, but long term, I think that Bitcoin will follow the trajectory once more of the M2 money supply. And now let's see also that the institutions that we're looking at, like miners themselves, but also BlackRock and all the other ETFs issuers, plus central banks around the world at the moment, they are all buying Bitcoin. And it's a bit weird development because every retail user thinks that they are smarter than all of these institutions in selling now their Bitcoin because they're a little bit fearful, instead of just paying attention to the signs that every one of the bigger players is filling up their pockets right now with Bitcoin. Why? Because they believe that it's cheap right now compared to where it will be. No matter what you do and no matter what you point out, little deviations from the trajectory of the normal one make people fearful. But let's just say we are in 2016 and we only have this reference, right? We would be here, sitting here, and everyone would be like, oh my god, what a huge deviation, this time is different. And then boom, right? You have this green line 2016 going all the way nuts. We would be here, right? We would be sitting here and this is your reference. So likewise, we have now 3 cycles of reference, and we're not in between these lines at the moment. So people are saying this time is different. And that's exactly the signal where I say if everyone is fearful saying this time is different, but the big players are loading up, it's definitely not. We're just going to draw another line, maybe under this, somewhere under this this line here, right? And also consider that we have been outperformed. No one cared about this when we had been outperforming before the halving, right? Before the halving, we basically, so this is the end of it basically here. Before the halving, we have been outperforming these and no one cared. Now we're a little bit underperforming because we're just realigning with the cycle, and everyone cares. Like if we have a flash crash again, a little bit, we would be maybe even deviating more from this. I wouldn't be worried. I think that in the long term, if we look back to this in a couple of 100 days, we will be looking at that it exactly followed the same pattern and trajectory. It is just waiting for major events of more liquidity, quantitative easing, cutting rates, and the elections also coming in October, and then this will go nuts, will go absolutely parabolic. Nonetheless, the market is fearful. We have been moving from extreme fear to only fear at 29 right now, so the market is completely fearful. But if you look at like super long-term fundamentals, like for example the power of law, you will find that nothing has changed, and that actually from the inception all the way along nothing has changed. And how can you look at this and say this time is different when you really don't have any evidence for something being different at the moment, right? Short-term crash, look at this, a short-term crash is always possible, and the absolute lowest point to crash to would be 30-something thousand, not 12,000, not 9,000 or 3.5k as Crypto Savvy predicts, but 30-something thousand, right? That would be power of law support. And this support, it over the years, it will just increase to 40 and then to 50,000 and so on, right? Whereas the upper band, if you look closely, is moving from 300k to 500,000 and so on. We are in every cycle until now, history, even if history only rhymes, we're coming close to these bands. Now, if we say we go to, it also shows our absolute limitations. So there are some people out there that say crypto will hit by the end of 2025 between 500k and 1 million. I don't believe that this is the case. It would be it would be at this point in time here where we are right now, where we're looking at impossible in terms of power of law, as well as dropping below 36k until that point would also be impossible according to power of law. So this is the band in which we are moving. And if the band is between 36k and 385k, then $58,000 or $60,000 is still a reasonable price. It's not dirt cheap, but it's still a reasonable price for such a new asset, where still most of the people on this world, most of the institutions, companies of this world, and most of the countries of this world have to come in. But with that said, let me know in the comments below if you believe that we still will see some kind of a flash crash. If you are ready, if you are following more Bitcoin, or if you are interested in altcoins, don't forget to like this video, subscribe to the channel with notifications on. I will be going live for a degenerate altcoin stream also very, very soon, and you will only know if you tick the little bell for notifications. So make sure to do that, and wherever you are on this world, have yourselves a great morning, evening, day, night, or afternoon. I catch you in the next video or live stream.